The procedure for this is that if we are choosing option 1, which is without payment, then we'll have to file a separate application. Whether it is for goods or services, we have to file an application called RFD01, etc. It gets processed usually in 60 to 70 days, which is much better than the old service tax regime, which used to take months, years to get refund. So like at least the process is streamlined when compared to the previous regime. As far as the other option, which is with payment, if it is export of goods, again it is much easier than the first option. Like the duty drawback or RODTEP, this also gets transferred by customs, not the GST. So as long as the document details are matching, invoice number, all of that are matching, then it will get processed in a month automatically. Data gets pushed from GST portal to customs portal, and then they will process it and give the refund. Even here also the same condition of 9 months applies. If it is goods, if we don't realize, we will have to pay back. For services, we can apply only if we realize. So services it is easy. For goods, once we get refund, people may lose track of whether we realize or not. But even that also will be taken care because exporters have to follow the FEMA guidelines. That they will have to file if they are not realizing within 9 months, ED banker will be behind them. Then someday ED also will be behind them if you don't do it.
Pradeep, this is a classic case. Because in the flyers they have said it is not applicable for option 2. But the department guys are saying, hey, you have already recovered, it is sitting in your bank account. Why can't you pay back to the government? So, nowhere in the notification or if you read the act, it is not coming at a full base that it is applicable or not applicable. So, any live case you have come across or anything which you have undergone this kind of a trouble from the department, if you could throw some light on this.
Okay. No, as such I have not come across any live case on this. I think if I am not wrong, there was a provision which says for SEZ supplies this unjust enrichment will apply or will not apply, then there was an amendment, etc. For exports, unjust enrichment as a concept, what the department is like, well, if it is not there in the law, then we can always argue, so there is no specific requirement. But conceptually speaking, to me, I'll have to recheck, but to me it appears that unjust enrichment applies here also. If you are taking the refund from government, why are you recovering the same thing from your customer who is located in abroad? The fundamental objective that you should not export taxes make it difficult.
Thank you.
I can answer the question.
Yeah, yes.
So I think unjust enrichment is applicable in both cases. In the option 2, when you're raising an invoice to your, let's say, a holding company or anyone outside, you will not include the IGST component in the invoice which you will share. It's just a matter of you including in your GST 1 and 3B.
Yes.
That's the only thing. So the unjust enrichment answer, I think it's answered.
No. While we may include only GST or 1 and 3B,
you will not share it with the customer.
That's right. Some clients, what they do is, the same GST invoice, they will send it to their customer also. Like for some
over there, that will be applicable.
That may be applicable, or if they are like not a seasoned setup in terms of if it's a small MNC, they don't know much.
It's a one-to-one correlation between your invoice and FIRC. Then obviously any officer will easily get to know whether if I raise 100 and if I got 100 in an FIRC. If I got 118, then there's an issue which obviously they will catch up.
No. Typically, so what's the practice all the big companies follow is that they give one commercial invoice which excludes taxes, and then this GST invoice they will record only maintain for their records. As such, they don't share it.
Exactly.
If they share it, then if they recover it, then ideally
that's enrichment anyway.
Being a EO unit can claim GST refund, RODTEP and also all India duty drawback, all India state duty drawback.
All three.
All three.
All three you can claim.
There is no unjust.
They are different. Yeah, they are different.
And can we claim this one refund on capital goods also? Recently we spoke now.
Yes. See, if you are an exporter, so if you are an exporter, your RODTEP will take care of taxes which you are not getting credit today,
Right.
which is your petroleum, VAT, all of it. Duty drawback will take care of your customs duty. Again, you don't get credit. GST refund will take care of your GST credits, which is anyways getting recorded in the returns. So all three are
In that I can claim capital goods also.
capital goods. You can claim if you are doing option 2, which is with payment of GST.
Can I claim this terminal excise duty if you are
The terminal excise duty thing is basically for petroleum products. Again, today if somebody is selling petroleum, excise duty has to be paid. That is, that term used is terminal excise duty in foreign trade policy. That also you can claim as refund if you are supplying to specific suppliers or specific customers like UOU, whoever is holding advance authorization. That is also quickly covered here. So that is called deemed export under foreign trade policy. If you are manufacturing any goods and supplying it to specific customers like advance authorization holder, if you can see in the slide on the right side, advance authorization holder, UOU, towards my right, I think for you also it is right. So advance authorization holder, UOU, or the finance projects financed by World Bank, etc., etc. So in that case, we get refund of excise duty also, which is paid on petroleum products or tobacco.
This is in addition to this RODD.
This is in addition to RODP is to address your export needs. If you are taking goods outside the country, this is deemed export is goods are not going outside the country. They are supplied within the country to specific customers.
Yeah, suppose I supply to the UOU, can I claim that?
You can claim. If you are supplying to EOU, you can claim TED, terminal excise duty.
Hello. Sir.
Yeah.
For the export, we in method 1, we don't get the input for the capital goods. In the second method, we get the capital goods input. So can we switch in the next year, like without LUT and 1 year for LUT? Can we do the plan?
Yeah, we can switch. Even we can switch next year, or you can do both options in the same year, same month. Only thing is same transaction we can do.
Okay. Input should not be overlap, but we
yeah.
can
Otherwise, we can. There is no restriction.
okay. In the quarter, next quarter also we can do that. Even with having the LUT, we can say that without LUT, we can pay the invoice.
Yeah. That's why typically people does it. Like suppose somebody has imported capital goods or procured capital goods in a particular month.
Okay.
So they have huge credit. So what they will do based on their sales product projection, they can recover only in next 12 months. So it's a working capital blockage. Therefore, they may opt for option 2 so that they will get the money.
Whatever the tax they need to pay, that should be in the same month in the capital goods is procured.
No, it need not be. It need not be. So the capital goods credit will form part of your pool credit ledger, and that can be utilized whenever. Whenever you are exporting the goods. Today, say you have imported capital goods in January, then the goods are manufactured and they got exported only in April because 3 months time it took. So while exporting in April, you can utilize this credit, or maybe you have not only there is no one-to-one correlation also. Meaning using this capital goods, you have produced say XYZ product, and you have another ABC product also. So no one-to-one correlation is required. ABC product is getting exported next month only. So next month you can pay utilizing this credit. So immediately you can utilize as long as you have export of goods or services. So quickly there is a small illustration, option 1, option 2. We can see, suppose if there is a supplier who is doing export of service, the value of the service is 1 lakh rupees. So under option, both options, the value of service is same. Domestic service, assuming he is doing 25,000, the domestic services value. If we choose option 1, he will not pay any tax. If we choose option 2, we will have to pay 18%, which is 18,000. So then, like these are the facts. So if the total, say they have a total turnover of 1,25,000, and export turnover of, so total turnover is 1,25,000. If you see, export turnover is 1 lakh, domestic is 25, 1,25,000 in both options. And coming to ITC, assuming that 1 lakh is realized, they have FIRC or BRC, then the ITC availed on three things: input services, and attributes is this is the breakup: 3,000, 5,000, 7,000, which is close to 15,000. So if they choose for option 1, they'll get only a refund of 6,400, because the formula is export by total into ITC. Here ITC calculation will take care of only 8,000 against their total ITC of 15,000. Okay. So whereas, by that way they are going to get only 6,400. Whereas in option 2 they can get a refund of, so they'll in option 2 they'll pay 80,000. That 18,000 will be utilized, paid using this credit which they have, like about 15,000 they have credit. So that credit will be utilized, and they'll have to pay balance 3,000 in cash. So the liability is 18,000, they have credit of 15,000, balance 3,000 they have to pay using cash. So that entire 18,000, okay, so 18,000 is not relevant, so entire 15,000 they will get it as a refund, because 3,000 they are paying from pocket. I think that here that row 2, like last column is incorrect, that it should not be 12,000, it should be 18,000. Entire 18,000 whatever they have paid they will get. Out of 18,000 they can pay using credit about 15,000. So that way in option 1 they are getting only 6,400, whereas in option 2 they will be getting 15,000 as a refund. So the basic impact is because of the capital goods credit.
Means at the end of refund period, what is that end of refund period?
So this is another thing. So it might have so happened that if we have domestic turnover also, so in this example, so 15,000, okay, for option 1 what is relevant is 3,000 plus 5,000. So out of that, if I have domestic turnover and I have exhausted all the 8,000, so then I should not claim refund from the government, because there is no value there is no credit which is stuck with the government. So
Refund period is what is
refund
it?
period meaning, so it may be 1 month or
There is
quarter.
a due date of getting refund, or it is the actual refund? What is it?
No, so okay, we say we have done exports in January, okay, and then we can file refund for January month. So after filing January return, what is the balance?
That is the end of refund.
Yeah, that is the end of refund period.
Sir, I
So you are filing refund only for January, assuming, okay, you have exported goods in January, you have credits which are, you have procured goods or services, utilize it
The
for
time of
that.
filing the whatever the returns for refund.
Not at the time of, there are two things. So in this case, assume we have exported goods in January. Option 1 is immediately after filing the return, which is 20th of February, you can file the refund claim. Or option 2 is you can file whenever you want, within 2 years. 4 or 10 is 2 years. Assuming you are going to file immediately. So in this case, L and M will remain same. So you will be filing refund for January. After filing January, what is your credit balance in your credit ledger? Okay, suppose if you have more domestic turnover than your export turnover, you may exhaust the entire 8,000. In which case, this L credit balance at the end of refund period may become 0 also. But the idea is that
At the time of filing the application, whatever the status is there.
correct.
So at the end of refund period, instead of that, it could be written at the time of filing the.
There are two things, that's why. Row M takes care of, ours is a classic case. Like in an ideal scenario, you may file in one monthly basis. Somebody will not, if they have recurring exports, they will not want to file monthly, they will file quarterly or yearly. So in that case, you will have to deal with two numbers. One is after filing, say you are filing for January to March quarter of 2025, in next year, 2026 you are filing, assuming April 2026 you are filing. So after filing these 3 months returns, which is March 25, what is your credit balance looking like? Say your formula is giving you 100, whereas your credit balance after filing these returns is only 80, because you have more domestic turnover, you have utilized the credit. Okay, and you are filing the return, that refund application in 2026 April. That time the credit balance is further went down, assuming say only 60, 100, 80, 60. So then we will get like least of these three, because the whole point is that how much credit is accumulated because of exports. If you are utilizing some of those credits for your domestic turnover also, then in a way you are getting compensated, so I will not give you refund. So therefore, three numbers are considered. What is the formula giving, which is credit proportionate to your
What it means the credit balance at the end of due date.
at the end of refund period. So in our case, refund period is April to March 2025, assuming. After filing these three returns, what is your balance looking like? So in the same example, balance assuming is looking like 80, whereas the formula export turnover by total turnover into ITC is giving you 100. So you are balance.
If you are filing for Jan, Feb, March once, so at the 31st March will be the end of the
Yeah, not 31st, because practically 20th of April.
next following.
The following month, because we will file only on 20th. After filing that return, if your balance has come down to 80, that means 20 of it you have utilized for your domestic turnover. So therefore they will not give refund. So they will give only 80.
So in this option one, we already claiming 3,000, 5,000 rupees as the input. So we already claimed you got a benefit on that. Apart
Benefit meaning it's only what
We have
it is
received-
lying only in the credit ledger, right? It will, as long, suppose assuming we don't have a
against domestic services we are
yeah, if you are utilizing from domestic services, then that will be taken care.
by the formula.
The not formula, here below last column L, credit balance at the end of the refund period or on the date of filing. There it will be taken care. If you have utilized for your domestic turnover, that balance will automatically come down. The formula says what is the credit proportionate to your
That's 80%.
Exports.
80%.
yeah.
Actual date of filing can be prior to refund period and also after the refund period. Actual date of
Usually
filing-
after the refund period. No? So after exporting only.
So means suppose the it is the 20th April. Refund period you said keep to 20th April. The return can be filed on the 1st April also.
You can file 1 and 3B you can file, but
So
practically
that
it is
can
not.
be before and after also.
Sir,
Actual date.
sir, if I am filing for April to March, April to June, sir, I mean, in for example, Jan to March, I can file only after March 31st. Subjected to that, your 3B is filed.
But what I am saying, the date of filing can be even after the refund period, after 20th also.
Yes, sir. Even after 3 years also, I mean, after 1.5 years also, you can
And
post.
that also can be on the very first also.
Yes, subject, your 3B should be filed, sir, before filing.
Yeah, practically we can file only after 15th because your 2B will not get generated.
Generated.
So on 14th only it will get generated.